Every single financial chart is telling a story. It's this whole drama of conflict, indecision, and then finally resolution. But what if I told you that you could actually learn to read that story, to understand its language? Well, that's exactly what we're going to do today. When you first look at them, I get it. These jagged lines can seem like pure chaos. But they're not at all. They're a visual record of human psychology, of real buyers and sellers battling it out for control. So the real question is, are you ready to learn the language they're speaking? All right, let's jump right in. We're going to start with the absolute basics, the alphabet of the market, support and resistance. Then we'll get into what happens when those rules get broken. After that, we'll look at patterns that scream big change coming and others that just signal a little pause. And finally, we'll wrap it all up with a practical toolkit you can actually use. First up, the foundation of pretty much all of this. I want you to think of the market like it's a battlefield. And the battle lines? Well, they're drawn at these key levels of support and resistance. Here's something you gotta remember. Prices almost never move in a straight line for very long. They move in these waves, right? Creating peaks and troughs. And those waves are the result of a constant tug of war between the buyers, who are trying to push prices up, and the sellers, who are trying to push them down. So this is the really crucial part. We call the price floor, that level where buyers just keep stepping in and propping the price up. We call that support. And the price ceiling, where sellers take over and smack the price back down, that's resistance. So think of it this way. Support is a floor and resistance is a ceiling. It's really that simple. And check this out. This chart shows it perfectly. Look down at the bottom, that line labeled strong support. See how the price comes down to it and just bounces right off? Now look a little higher. You see those minor resistance levels? They're like temporary ceilings. And then you've got that major resistance way up top, where the price tried and failed to break through. These are the battle lines we're talking about, right here in action.
So we've got our battle lines set. But what happens when one side smashes through? Well, that's when things get really interesting. And this brings us to one of the most powerful ideas in all of technical analysis, role reversal.
It's a really simple idea, but it's incredibly powerful. When a support level is broken, like really broken, the whole psychology of the market shifts. That old floor can suddenly become the brand new ceiling. And of course, the same thing happens in reverse. A broken resistance level can become the new floor, the new support. This chart is just a fantastic example of that role reversal. Over on the left, you can see the price is bouncing along, staying above that line. That's our support. But then, bam, the price breaks down right through it. Now here's the crucial part. Watch what happens next. The price tries to rally back up, but it gets stopped cold, right at that same exact line. The old floor has officially become the new ceiling. Okay, so now that we've got the basic language down, let's talk about the major plot twists in the market story. These are the trend reversals. These are the patterns that suggest a trend is getting tired and might be about to flip direction entirely. And here are some of the main characters in that story. You've got the famous head and shoulders, the really intuitive double and triple tops and bottoms, which look like M's and W's, the super sharp V-shaped reversals, and the slower, more gradual rounding patterns. Let's dig into a couple of the big ones. The head and shoulders pattern, it's one of the most reliable reversal signals out there. It basically tells a story of fading optimism. So first, you have an uptrend that makes a peak. That's our left shoulder. Then there's one last big push of enthusiasm, creating an even higher peak. That's the head. But the rally after that, it's weak. It forms a lower peak, the right shoulder. This is a huge sign that the buyers are just running out of gas. The whole thing is confirmed when the price breaks that neckline, which is just the support line connecting the low points. And here you can see one in the wild. It's so clear. You've got the left shoulder, the higher head, and then that critical lower right shoulder. That failure to make a new high, that's your first major warning. And once the price sliced down through that neckline support, you can see the trend shifted from up to down, just like that. It's a textbook example of buying momentum just completely giving way to selling pressure. Another total classic is the double top, and it looks pretty much just like the letter M. The story here is all about buyer exhaustion. The price rallies up to a resistance level and then pulls back. Then it gathers up all its strength for another try, but it fails at that exact same resistance level. That second failure is everything. It tells you the buyers have lost their nerve. The reversal is confirmed when the price breaks below the support level, the neckline, that was formed between those two peaks. Here we go, a perfect double top on a chart.
Now, don't even worry about the Chinese characters on the image. The pattern is universal. You can see those two peaks forming that M shape perfectly. The buyers tried to push higher 2 separate times, and they failed both times. After that second failure, the price broke down through the neckline, and you can just see the powerful reversal that came right after. Now, not every pattern is some big, dramatic plot twist. Sometimes the market just needs to take a breather. We call these continuation patterns, and they usually signal that the original trend is about to get back to business. Right, so if reversal patterns are kind of like the climax of the story, continuation patterns are the moments of suspense. They represent this temporary truce between buyers and sellers, a sort of coiling of energy before the dominant side takes control again and pushes the price in the direction it was already going. Triangles are a perfect example of this. So on the left, you've got a symmetrical triangle. The peaks are getting lower and the troughs are getting higher. The market is basically undecided, coiling up tighter and tighter before it's going to break out one way or the other. Now, on the right, we have an ascending triangle. Notice there's a flat resistance level on top, but the buyers are making higher and higher lows. They're relentlessly pushing up against that ceiling. That shows you the buyers are getting aggressive, and the price is probably going to break out to the upside. And again, don't worry about the text on the charts. The shapes are what tell the story. Another great one is the flag pattern. You can see it really clearly here. Just focus on the shape. After a big, sharp move down, the price kind of consolidates in this little upward-sloping channel. It looks just like a flag on a flagpole. This is just a short pause, maybe some profit taking, before the sellers grab control again, and the downtrend continues with a lot of force. So we've talked about reversals, we've talked about continuations. Now let's put it all together into a handy toolkit that you can start using to read the market story for yourself. Before we get to the summary, this right here is a really crucial piece of advice. These patterns are reflections of market psychology. They're not just rigid shapes. You have to learn their essence, the story they're telling about the fight between buyers and sellers. The market is always changing, so just blindly following rules won't work. You have to be flexible. And here it is, your trader's toolkit. This slide is an awesome visual summary of everything we've gone over. Down at the bottom, where it says buy, you have all the bullish patterns that signal an uptrend is likely, like the inverse head and shoulders or that ascending triangle. And up top, where it says sell, you've got the bearish patterns pointing to a downtrend. Yeah, the text is in Chinese, but the patterns themselves are a universal language. This is basically your cheat sheet for reading the market. We have covered a ton of ground today, from the basic language of support and resistance all the way to the complex stories told by reversals and continuations. So the next time you look at a chart, I hope you don't just see random noise. I hope you see a story unfolding. And the final question is, how are you going to use that knowledge?